Hi, my name is Alex Carlucci with Gus & Cho Associates at Loan Cabin. I'm here to talk to you today about people asking me how much they qualify for, and I struggle with a lot of clients because it's kind of complicated. So let me explain the problems I have and how you guys should address it so you can understand it better, so you guys don't have a miscommunication with your loan officer. So let me give you an example. So got a client, they call me up and they say, what's my max qualification? And then so I get their income docs, I run their credit, I input it in the system, and I'll say, I need to know some property taxes. What are the property taxes ranges in the area you're looking? They don't really usually know this question, so it's kind of, they have to look it up. Let's say they tell me it's $5,000 to $8,000 in the range that they're looking for. So I use the $8,000, or sometimes I'll use the $7,000, and I'll say you qualify for $250,000 with $8,000 in taxes. And they go, great, that's great. And they go, what's my payment going to be? And I'll say, oh, $2,200. They say, oh, I don't want to spend that much. So there we are. It's like, okay, then you don't qualify. Then basically you qualify for more than you want to spend. So then they'll go find a house and they'll say, how about this $200,000 house with $4,000 taxes? And I'll say, yes, you qualify because I've already pre-qualified you for more. And they go, what's my payment going to be? And I say $1,500. And they're going to be like, great, that's exactly what I want to spend. Then they go look at the house and they think that the house is something wrong with it. They don't like it. And this is where the trouble begins, because now they think they're approved for $200,000 and that payment's going to be $1,500. So now what happens is they go out and look for another house and they find it's $200,000 and they say, we want a pre-approval for this one, we like this one. And it comes back that the property taxes are $8,000. And now I have to tell them that their payment could be $1,850. And then they say, no, we don't want to spend that. I thought it was $1,500. The last $200,000 house was $1,500. So why is this $200,000 house $1,850? It's all because of the taxes. So the taxes are always the wild card when you are looking for what I qualify for. So I can't give you a dollar amount, I can give you a payment amount, and then you tell me that payment amount, and I can tell you each house you're looking at if it fits that category. So people want to know what they qualify for and then how much they really actually want to spend are two different things. So it's really a give and take. You have to go back and forth a few times with the consumer until they really understand and they get it. And it's not a purchase price. If I tell you $200,000 with $4,000 taxes and you go find something $200,000 with $5,000 taxes, it's gonna be $100 more, $80 more a month. So make sure you understand the difference between what you qualify for and what you actually want to spend, and make sure that you fit that when you're looking for your house. So make sure you know the payment of the house before you go look at it, not if you just qualify for it, because you may be deterred when you find out the payment's higher than you thought because of the back and forth you've already gone through with your mortgage broker. It's very difficult for you consumers to understand that and do the math yourself. So just call your mortgage broker. He has no problem helping you out, especially me. I love telling you how much your payment is. It takes me a minute. So pick 5 houses, give me all 5 before you go out and look. I'll tell you the payments on each one. I'll even tell you your cash to close on each one. And you'll know exactly how much you'll need to spend and how much your payment's gonna be before you even go look at the house. So if you do fall in love with the house, you don't come back home and find out your payment's $200 higher than you actually wanted to spend, even though you qualify for it. So that's one way to make this process a little easier for you when you go house hunting. I run into this all the time, and it takes a few times my customers, but they eventually get it, and I don't expect you to get it. This is something I do every day. And I understand it better. So it's really hard to communicate to the borrower. They think it's a purchase price and they don't understand the taxes. And here's another wild card too, just to keep in mind, insurance. So some parts of, I'm in Illinois, some parts of Illinois, insurance for the same person, same value house, same quality credit as the person, in different areas, the insurance will be higher because maybe it's notorious for vandalism, or maybe it's just a higher insurance area because the wind hits it more. There's more wind damage claims in that area. So there's all sorts of different reasons why insurance might be higher, and I have to use a number. And in Illinois, for example, I use $80 a month, and some people will get it for less than that, and some people will get it for more than that. So if you go up to your max qualifications, that's something you gotta be worried about. You better make sure you get that cheap insurance. And in Florida, we do a lot of business. The insurance can be really expensive. It can be $300 a month through the hurricane insurance. So if you really want to press up to your limit for your max qualification, and you don't mind paying that highest payment that you qualify for, we better look at your insurance. You better start calling around and getting some insurance quotes. Even though it won't be on the exact house, you'll get an idea where you might be, and those are insurance numbers we can use. So that's something that can also make the process better for you and me, and make it, if you are going to your max qualification. So if you like this video, please like it, and if you got any questions, ask the questions below and we'll get back to you. Thank you very much.